Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and I'm here with David Skarica, who runs the website AddictedToProfits.net. Dave is located in the Bahamas, and I'm on the East Coast
Yeah,
of the United States.
it's gonna get some better lighting.
Yeah, sure.
Yeah.
But
So
we're seeing some interesting things in the market this week or today, for that matter. I mean, this morning, Putin announced that he has a vaccine. He's injected his daughter with it. And the stock market gapped up substantially this morning on that news. A lot of excitement and hope that this could be a miracle cure for all the troubles that we're suffering with this virus. But gold fell over $100. Silver also closed below 25. The one of the biggest 1 point drops in gold in years. So, what do you think's behind it? Is it the Putin vaccine making people get out of the metals?
yeah, that was probably an excuse because remember I kind of figured the vaccine, I didn't know it would come from Russia, would be this excuse for a precious metal sell-off. And the reason being is I think the spin is going to be with the vaccine is everything's going to get back to normal, right? That, oh, once you're in a vaccine, people will fly again and go on cruises again and restaurants and businesses will open up again and everyone will act like, it's a V recovery and everything's going back to normal. And why do you need to own gold? But I think the issue is, and even the medical professionals have talked about this, that a vaccine at the very most is probably only going to be like, 50%. It's like when you take a flu shot. Does a flu shot prevent you from getting the flu? No, it reduces the effects of the flu. So people have to understand, even if you take a vaccine shot, what's going to happen is you still could get coronavirus or COVID or whatever you want to call it, but it just might reduce the effects by, who knows, 25, 30, 50, 60%, right? So people are still going to get it. And I think that will be the second wave, that if people are just still really scared of the thing, they won't care that if the vaccine reduces it. They still just won't want to get it, and especially if you're someone with existing conditions who's at risk, you're really not going to want to get it. So, yeah, that's basically it in a nutshell. I think, but I always thought this kind of vaccine thing, and again, I didn't expect to come from Russia first, but would be the kind of the warning, be the kind of a reason for a sell-off because people would think things are going to back to normal. And by the way, in my newsletter last week, we called for a 15 to 20% reduction in your precious metal positions. And we had a couple of call option positions, one in SLV, one in First Majestic Silver. And I sold all of those because, they're options, right? And, and essentially, I think almost the day of the top, actually, maybe with a couple of days at the top, the SLV position. And actually, I bought the SLV position the day of the bottom. I don't get stuff that right all the time. But yeah, it was a great trade. And I'm just kind of waiting for things to shake out a bit because now I know on a lot of my main trading accounts, we're 25% cash or so with some gold stocks, some other longs, maybe some short positions. But I'm kind of waiting to see how things shake out. On Mayon bounces, it does look like the momentum stocks, like the Apples and the Microsofts and all the stocks that are kind of led. It does really look like they may be topping now. And maybe on bounces, I'll be looking some put options or some of the bear ETFs on the NASDAQ.
Yeah, I almost wonder if the news. One thing about the Putin news is that they were saying in the media that Russia has done no trials for the vaccine at all. So it's like an early stage, the equivalent of an early stage vaccine in the United States, and therefore not to trust it, and it's a lot of hype and so forth. But if that's the case, then the vaccine news really may not have had much to do with the moves in the markets today when it comes to the stock market or gold.
Yeah, I think, again, it's kind of an excuse. And the one thing, the advantage you have in Russia when you do something like this is you don't have all the liability in Russia. People are just going to take stuff, and then if it doesn't work or they have an effect, you're not going to have massive lawsuits and whatnot like you would, especially in the States. So that also makes, that trial, kind of a little bit easier to do, right? Because, you can just, people are, like I said, even if it doesn't work, I don't think in Russia you'll see mass lawsuits or something like that. And like you said, if his own daughter's taking it and whatnot. But like you said, I just think that you looked at the way the gold and silver stocks were trading, started seeing them being talked about a lot in the media. I'm going to start putting up some charts here in a second.
Okay.
Yeah. So, yeah, actually, what's interesting, I have a Russian stock right here. This is one of the big banks in Russia. I don't know. Yeah, you can see that here. And yeah, you can see it actually was up like back to almost June highs and up over 3%. So obviously that news in Russia had an effect on the Russian market. So I just think that, if we go look at SLV, sorry. Yeah, you can see with the SLV here, like look how much it ran up, and you can kind of see a little minor 3-day topping formation, around $27 on the SLV, around $30 in silver, the actual silver price. So it did look like it was starting to top out. The RSI has been overbought really since the middle of July. So yeah, and a lot of late players came in and they got probably shake it out today. So I think it's a healthy thing, and I wouldn't mind seeing a little more downside, maybe 20 on the SLV. That would be okay. That would be, maybe that'd be roughly 24, 23 on silver. I think that would be a good spot to kind of start to accumulate a bit.
Well, at the same time as silver and gold have pulled back, the U.S. dollar index came into this week extremely oversold. So, basically it's bouncing too, as you can see from that chart you just loaded up. That's up, the ETF that tracks the US dollar index. But when a currency, and I think this is in a downtrend, a long-term downtrend, because the peak was earlier this year, it's below the moving averages and so forth. But when a currency gets oversold in bounces, it tends not to go up that much, but just kind of sit there. So that's kind of what it looks like is happening.
Yeah, like you look at the euro here too, it looks like that's a short-term top, and maybe like the old resistance about 114, 115. So maybe that now becomes support. So, but I agree with you. And I think the thing is too, is now that we're in election year and, we're seeing already talk of like, some stimulus, is that if there is a kind of decline here, and everything looks like it starts to roll over in the next month or two, I just think you'll see more talk of money printing, more talk of stimulus programs, all of that kind of thing. So I think that's what's going to happen here. And then, like you said, but like we are overbought in the euro, oversold in the dollar, overbought in precious metals. So I can really see a rollover happening. But I think the real interesting thing that no one's talking about, because everyone's now just bought into the stock market going higher, is that it looked like we might see a short-term top in the NASDAQ as well. And if you look at like the Apples or Microsofts, all these stocks that kind of led the rally, they now look like they are starting, to roll over, right? So I think that's another interesting thing as well, is that it looks like we're seeing the market beginning to this early stage of rolling over, so. And remember the NASDAQ 100 is like 6 stocks now, like 50% of the index is 6 stocks. So, and then there's also little stocks like, this is Etsy. This is an online clothing shop. I think I might even gotten this jacket from there, but, anyhow, but it is a good site, but it doesn't mean the stock isn't wildly overvalued. And that chart doesn't look that bad. But if we go back a few years, and I'll take the log scale off so we can see how parabolic it's gone. You can see that's crazy. And that's what a lot of these online companies have done since kind of the start of the coronavirus lockdowns, because people are buying, clothes or whatever goods off companies like this, not just the Amazon, just all these online companies. And I think that as, we see this continued, like that would be one thing the vaccine could do. It actually could, ironically, kill stocks like this, because then people are going to start going out shopping a little more and not just doing everything online. So I definitely think that these kind of stocks, and it's not just the 6 or whatever, 5 or 6 FANG stocks or big cap NASDAQ stocks. It's a bunch of these kind of like smaller online companies won. Actually, what we're using right now for our video, Zoom is actually, oh, sorry. I thought Zoom's ticker was Zoom, but I was wrong. It's ZM. Anyhow, we'll get it right now. Yeah, look, that actually looks like that looks like a big breakdown today of the short-term support. So I think that a lot of these stocks that were kind of the, I guess you could call them the COVID leaders, they look like they're beginning to roll over, you know.
Well, right now, what do you then see as the best way to make new trades to make money?
Well, there's something that me and you are doing is that, see, when I sold those gold and precious metal stocks, I didn't just sell 20% of everything. I sold maybe 30 or 40% in stocks that had run up a lot, and then kept positions in stocks that I think, you know, Mike and I do private placements, and like a deal. I'll give you two things. This is why we do private placements, first of all. Then I'll show you another one, a deal that we own. So, oh, sorry, that's African. I meant, because the tickers are so similar. This is, I like African, by the way. This is Aftermath. So this is a deal that we did at 8 cents last year. And I'll go back a year so we can see it. It was about this time last year that we bought the private placement. And you can see the stock went, well, like last August, it was already 20, but I think it was last June, actually. So over a year ago. And then you see the stock went to 50, and then it crashed kind of with the market in February, March. And then it went, you know, is now roughly 80 cents a share. So this stock's basically, it is 80 cents a share. It's up tenfold since the placement we did. Plus, this had a half warrant at 12 cents. So if you still own that warrant, and I think I still own a bit of the warrant, you essentially can exercise that warrant at 12 and sell it at 80, right? So this is why we do these things, because you get locked in. And if a stock is not that liquid in a junior company at first, by the private placement, you can buy a big position privately, right? And then you can, even if you panic and sold all your stock in Aftermath, say in March, you could have held the warrant, and the warrant would still be up 7 times right now at 80 cents, roughly 7 times. So this is kind of what we're doing right now. And this was a big winner with us, and they just took over a new silver property. You know, I still own a small position in it. I think Mike actually still owns most of his stock in it. And
share yet.
Yeah, he hasn't sold the share yet. He's smarter than me. But I was just doing, when I was selling it, and I always recommend that if these things go up 4, 5, 6 times, you start taking, you know, a quarter, half of your position off. And I was just rolling it into other deals, really. So the same kind of group, they have a stock called Vendetta, and this is where I'm talking about. So this was a stock I didn't sell, haven't sold a penny of yet. And yeah, you can see this stock is 9.5 cents and actually hit a new high for this move here. And we bought a 4-cent placement with a 6-cent warrant in this one. And, you know, I wasn't selling this because at 9 cents, Vendetta's only got like an $18 million market cap. So it's still not an expensive company. So that's kind of what I'm doing, is that these juniors that really haven't moved yet, I'm just holding them or maybe buying them. And then, like I said, I'm buying hedge positions. Like I own puts on Microsoft. I own puts in a few more tech companies. Yeah, I'm considering on any bounces buying the QID as a hedge into the fall. And yeah, that's essentially what I'm doing, is either hedging or, you know, these precious metal stocks on pullbacks, buying them. And actually, I even think a couple of US based marijuana stocks might be worth a trade, you know, coming in the next month or two, because if the Democrats win everything, the House, the Senate, you know, the presidency, or at least 2 of the 3, you know, I think you're going to see like marijuana legalized in the States. So these little marijuana producers, which are pretty beaten up for the most part, because the marijuana sector is beaten up, that could actually be a sector that bucks the trend, even if, you know, kind of the market goes lower. But the thing I would say about the market, I know everyone's chasing these, like I said, I call them COVID stocks or these online companies. And I'm going to put up Netflix now, but that looks like Netflix, like it's starting to roll over as well, right? So it does look like they have kind of topped and maybe rolling over into the fall.
Yeah, so I'm just going to, for people who are kind of new to trading and the gold space and small cap companies, that, you know, I'm just going to explain what a warrant is. You know, you can buy a stock on the market, which we do,
Yep.
obviously, but you can also buy what's called a private placement from time to time. That's when a small cap company is raising money. You buy shares directly from them, and the money that you give the company, goes to their bank account or whatnot. That's how they raise money. But to make this enticing, they'll give what's called a warrant, and that's a long-term option to buy more, and it's typically at a higher price than what the stock is trading at. So you're
The reason I have this company up, M Gold, because this is a company that's currently doing a financing at 9 cents. The stock is right at 9, and they also did a financing at 6 with a warrant at 8. So the people I got in, they're already up, say 50% because the stock is 9 cents. But it doesn't matter if M Gold goes to $1. Like you're saying, they still have the ability to buy an additional share at 8 cents.
And this is a stock that I bought shares myself on the market. I didn't buy the private placement, but you have, and some of your subscribers.
Actually, I didn't buy it either because I was getting so many of my subscribers in, and I get, for helping them raise money, I get something called, broker warrant. I get actually warrants as part of the fee, right? So I can buy those warrants at 8 cents. But what happened was I was so busy getting all my people in, and because, gold has been doing well, the price placement sold out very quickly. I didn't even get a chance to buy it myself. It doesn't really bother me because I have those warrants and I own some on the market as well. But I might do some of the 9 cent financing here. And I think the 9 cent financing has an 11 cent warrant. Don't quote me on that. I have to, because I just got the form sent to me. But again, this is the kind of thing we do. And, at the current price of 9-10 cents, it has a very small market cap. They have a great model where they own interest in a whole bunch of other junior companies. So they'll sell off properties and have stock interest in those companies. And I think the interest they have in those companies has a larger market cap than what the company is worth or trading for. So this is the kind of thing, anyhow, but this is the kind of thing we do. And like I said, M Gold, look, it looks like that stock's gone up a lot, but this just goes back to when it was super beat up, back in that March correction. Again, if I go back a year in M Gold, you'll probably see, it was trading. Yeah, you can see it's basically trading where it was a year ago at around 9 cents or so. So I just think that what you're always doing in juniors aren't like owning Newmont or Barrick or the big caps. You're not going to want to like say you think gold's going to go up next 5 years. Those you could probably own for the next 5 years. But with these little junior companies, I think it's like a 12 to 24 month time frame. Then you want to rotate into a new deal that's getting kind of on the ground floor, has a cheap market cap, has a lot of ability to go higher. And, we have access to all these kind of things. And so essentially what I'm trying to show is, I showed you, like Vendetta's up 150%. I showed you Aftermath went up almost 10x in value. I've got other ones like Wallbridge. This is one Mike and I did years and years ago. At actually 8 cents, just like that. You can see this stock is almost $1 a share. This is kind of an extreme one that's done well. But you can see how good, and I think in Wallbridge, when it did at 8 cents, I think the warrant was 10. So you can see how well these things can do. And so right now, what I'm going to do is I'm looking for kind of the new ones. Like we got one called Full Metal. It's halted right now, but they're going to do a financing. And then a couple other deals. After Full Metal, I'm probably going to wait to the fall to really do more because I want to see how this consolidation in gold shakes out, how maybe a potential correction in the stock market shakes out. But again, now you have the ability to, if you did miss this kind of move in gold and precious metals, I think I've got some cheap stocks either on the market or via private placements that people can get into here.
Well, are you running some sort of special for your trading service?
Yeah. So what we're going to do is probably on Wednesday and Thursday, I'm going to open that up. So with my service, which also includes market commentary and trade updates, like I said, I have short positions. Like I'll give you an example. Like I told you, I have some puts in Microsoft that we bought probably in the 205 to 210 range. Now the stock's 203. So I do those as well. But I think the biggest thing is if you're interested in these gold mining juniors or small cap companies with the private placements, if you're accredited, I think that's really where the value in the service lies. So yeah, the first month of the service is only $35. And then after that, it renews at 70. So you could try it out for 35 for the first month, see if you like it. And then if you do or don't, move on. And like I said, I'm very disciplined in trading. So even though the market's rallied, I'm actually also, if you're interested in trading options or hedging, I'm going to do a new put position every week for the next 4 or 5 weeks, just in case there is this decline in the fall, right? As a way to hedge the portfolio as well. So it's not just longs. I've lost money enough times in the market to learn from it, to realize you need to be hedged. So we do that in the newsletter as well.
Well, when you say that, people got to realize both of us have been in these markets now since the 90s.
20 years, yeah.
Over 20 years, really.
Over 20 plus years. So, and you learn from your mistakes, right? So, Well, and the thing is too, we know with gold stocks is just, this is one little warning I'll say is, not just the 2008 decline where everyone remembers gold stocks crashed with the market, but even in 01, 02, when you would have these selling capitulations in the market, like the summer of 02, even after 9/11, the gold stocks, because they are equities, would sometimes for a few days or a week or two get caught up in that. So that's why I want to hedge as well, because even if in the long term, whenever the market declines and they just throw more money at this problem, more printed money, more buying bonds, more stimulus, gold ultimately goes higher, that I know when there are those kind of selling climaxes, and that happened in March as well, that I'm hedged, and I'm at least lessening the losses while they are in those consolidations or corrections, But then also you have to step up to the plate, and when you get those corrections, like I said, I bought the SLV calls. I'm telling you, I nailed it. Like we bought them the day the market bottomed. Maybe not the day, but it was like after this gap down here. And so I remember I bought the January 13 calls when the SLV was about 11 to 12. And then, you can see it, and we sold in this range up here in the mid 20s, so that's another thing too. If you're hedging, then the hedges go up, but then you can also rotate those hedges and money you've made on the hedges back into these long positions where you're really going to make the real money.
Well, for you, do you primarily then use options to hedge a lot of times?
Yeah. Yeah, because so what I'll do is I'll buy some out of the money options. It was tough to do it the last few months because the premiums are high. But one thing I was waiting for, and actually I'll put up a long-term chart of this now so people can see. This is the VIX, right? And you see the VIX today, the intraday low was 2028. I was looking for the VIX to get about to 2021. And if you go look at bear markets, right? So I'm going to go back to 1999 so we can see both the 2000 and 2007 bear market in here. What you'll see is, I know it looks squiggly, but you see that's 2007. But notice during the bear market here, the VIX did get into the late teens a few times. But once you get to that 15-20 range in bear markets, that was 28. You can see 2000, 2001. During this low, you can see VIX got to 17 or so. And then every time the VIX got to that 19-20 range in 2000, 2001, 2002, during the bear market, the rally almost always peaked, and then you had another sell-off. And that's where bear markets are different from bull markets, because you can see during this bull market of roughly 2009 to 2020, the VIX was trading at, even the mid-2000s, VIX is trading at 11, 12, that sort of thing. But in the bear markets, usually you get into that late teens, early 20s area. That's the time it tends to kind of peak. But what you can see, the positive thing about it is usually you have a bit of time frame to get in. It's just not overnight. Like the market will top out over a number of weeks. So maybe between now and the end of August, we kind of top out. And maybe the VIX has one more surge lower to the late teens, and that's finally it. So, but the nutshell is the premiums and options aren't that bad anymore. It's not like this fall. You can see this spring in March, you can see the VIX got back to where it was during the financial crisis.
Yeah, pretty wild how high the VIX got. Well, as we kind of wrap up here, where should people go? Well, on my website, I'll provide a link for people to use. But I mean, people can be watching this randomly on YouTube too.
Yeah, I've got a platinum members link. You can see, I'll just show you because I'm showing all this stuff with my, with,
Yes, so go to addictedtoprofits.net.
yeah, .net. And you'll see right at the top says, subscribe today. So
Okay.
what I'll probably do is embed this video and have a little more about the special deal, right?
Okay.
So you just click on that link and then the subscription page is there and, you know, service. And, you know, you just click on that link there. And then that takes you to the ClickBank page where, you know, where you can subscribe for that $35. I'm going to put
35 is cheap to get started, and you're right in it, right?
That one's priced in Canadian right there. I think probably because I have my Canadian VPN on, yeah, on my computer.
Sure.
But yeah, 51 is roughly 35 Canadian, so or American. So yeah, you do the $35, and then you see if you like it after a month. And look, I have to be honest with one thing. I say I have all these services there, which I do. But sometimes I don't put as many updates on. Sometimes I'm concentrating on helping these deals raise money. And that's good for you because then you can get into the deals as well. So I'm not always able to do, say, 5 updates a week or something. But it's one or the other. Either I'm doing a lot of updates or I'm doing a lot of deals. And it's like either or. I think the next 2 months, I'm going to concentrate more on the updates because I just raised a bunch of money for a few deals. And like I said, we are going to do this thing with this company called Full Metal Minerals in the coming weeks. But after that, I'm not really looking for any deals till the fall because a lot of the deals that I have, like I said, what I like to do is sell a little, keep the warrant, rotate in the next deal. And some of these for both of us, the 4-month hold is going to come off between about September and October, November. And I want to do that. And then I want to see what deals in October and November kind of interest me.
Yeah. It's like the perfect spot niche in the market to get involved in. There's no doubt about it. You know, you showed that chart of Aftermath Silver, and that's one that you helped me get into.
Yeah, and those warrants,
I'm still in it, and I'm up more than 10 to 1 or more than 8 to 1 in it, you know.
Yeah, and those warrants make all the difference because, like I said, even if you got shaken out at the lows in March and sold all your Aftermath, say for some argument's sake, someone had 200,000 shares, they had a half warrant, which means you would add 100,000 warrants. Well, here you are. You can still exercise those 100,000 warrants at 12 cents, cost you $12,000, and sell the stock for 80. So like it's like that's what's great about those warrants is that even if you're a bad trader and you get you get shaken out, you can still sell these things, you know, and still make money in these things, you know.
Yeah, for sure. Well, for everyone listening, highly recommend that they join your service, click the link, and get started.
Yeah, thanks for being here today. And I think this is get over. And also, again, this just shows you I'm not just promoting deals. Like we're talking about the macro markets and hedging, et cetera. You know.
Yeah, definitely.
Okay, thanks.